Now, South Africa's rand was mostly flat in early trade today, with analysts expecting it to weaken going into the weekend and in an environment of low risk appetite. Stocks opened slightly in the red, with the JSE Securities Exchange top 40 index falling 0.4%. The rand traded at 14.32 versus the dollar, which fell off 0.07% of Thursday's New York close at 14.31. Analysts said the risk appetite was likely to be depressed ahead of a Federal Reserve policy meeting starting on Tuesday, which could signal a U.S. rate hike in June. Now, for more analysis on the market, we are joined from our Cape Town studios by economist Jaques Magliolo. Thank you very much for joining us, Jaques. What do you make of the performance of the rand now of late? And we see that it has recovered slightly from weaker levels.
Good afternoon. My take is very simple, is that South Africans tend to be very mired down in their own troubles and tend to forget the fundamentals of stock markets and how they operate. Our rand to the dollar was always stronger than the 17 odd rand to the dollar that was indicated after the disastrous firing of the finance minister last year. We should always remember that the fundamentals of market are sacrosanct. They don't change. They are there. Politics and economic noise, as we call it in the market, will affect currencies and markets temporarily. There's always a return to value, and always a fast return to value. In other words, any reaction or counter reaction is always met with the opposite reaction within a short term.
Now, Jaques, there's been a significant improvement of the rand against the euro and the pound. I was looking at the figures recently, and they were showing that it was 17 rand 20 against the euro and over 22 rand against the British pound, respectively. Are the dynamics different?
No, the dynamics are not different. There's a difference in the correlation of international markets and how analysts assess those correlations. So we tend to forget that 4 of the top 10 economies of the world are based in Europe, and therefore there has to have some kind of influence over the currencies between those countries.
Now, the oil price is rebounding from the $30 mark, now over $35. What are the attributes here now, and how high do you think it can go in the short interim?
Well, let me preface that by saying that South Africans tend to be so mired down in their own troubles that they miss bull runs continuously. The rebound in the oil price, or the Brent, over the last few months has been predicted over the last 6 months by the IMF and other such organizations. We are now back on track. We should see the oil price rise over the next few years, constantly but slowly. But more importantly, this heralds a return to a commodity upcycle. And well, we've seen that with in the last 3 months, with Billiton rising, the share price rising by 45%, Anglo rising by 200%, and Exaria by just over 100%.
Now, most investors have been looking for a safe haven, but looking at the trends, especially in the past 6 months, where gold had lost its value quite significantly. Now, we saw a rebound as it fell 0.3% to 1,244 an ounce. It was on a 5-week high of about 1,270 at the moment. And looking at the figures currently right now, do we see gold regaining its status as the real safe haven of the world?
Well, let me start by saying that I don't see gold as a safe haven at all. It's a trading commodity like all other commodities. I know that goes against a lot of what analysts say, but even if you do look at it as a safe haven, it will reach those levels because it is a commodity, and commodities at the moment are the flavor of the month. We should see this continue for the next few years. I believe that we are about to enter our 8th year of bull markets. You have some analysts saying that we are in the 8th year of a 21-year bull market cycle. So this is just part of that cycle.
Let's turn our attention now to platinum. I know that many people have been tracking it ever since the strike in the platinum belt, where platinum really lost its value because other people were scared of losing their the value and the worth of their investments. And you were saying in your analytical perspective that during strikes, you don't need to sell shares because these strikes come to an end, and when they are resolved, it's back to business as usual. And right now, we see platinum still below the $1,000 mark. What do you think about the chances of recovery of platinum to its heydays?
Okay. If you look at what's been happening in between the Russian economy and the whole oil embargo, affecting many variables there, including platinum, and that should start resolving itself. Remember, the market always returns to fair value. At some point or other, you'll find that the international investors will target those countries and target those specific markets. If you look at South Africa, for instance, in the last year, 100 billion rand was pumped into our market, buying 10 of the top 20 stocks. That, foreigners saw value when we didn't. The same thing with platinum, and for that matter, any other commodity.
Now, going forward, we have the Federal Reserve having a meeting on Tuesday. What do you think the economy is going to be like, especially emerging markets?
Well, the expression used by my colleagues in stock market is that the US will not shoot the lights out. It is a steady economy. Even if they raise interest rates, they're still very low. Focus on emerging markets. Well, the IMF recently increased their forecast for China's growth to 6.5%. I see a return to emerging markets. If you assess markets overall, you'll find that there is still a lot of money in the US looking for a safe haven, or at least a haven where there's high interest rates. I see South Africa being on top of that pile.
All right, Jaques Magliolo, an economist and author, talking to us live from our Cape Town studios right here on News Today.